Hello and welcome back to our channel. Before we jump into today's fascinating journey, let's get a few things straight. We'd love it if you could hit that like button, subscribe to our channel, and don't forget to leave a comment below. Your engagement really motivates us to keep creating more content. Also, hit that notification bell to stay updated on our latest videos. Your support helps us create more informative and engaging content just like this. Now, are you ready to take a journey through time and delve into the history and implications of a concept we all know, but seldom ponder upon? It's something that impacts our lives on a daily basis, influencing our decisions and shaping the economic landscape of our society. Yes, you guessed it right. Today we're going to talk about interest. So sit back, relax, and let us embark on this fascinating journey together. Now let's get started. Have you ever wondered how a concept as ubiquitous as interest came into existence? Interest, a term we hear thrown around in our daily lives, has a history as rich and intricate as the civilizations that birthed it. Let's journey back in time, to the cradle of civilization, ancient Mesopotamia. It was here, amidst the fertile river valleys, that the earliest forms of interest were born. Back then, it was a simple idea. A tool to ensure that loans of grain or silver were returned with a little extra, a way to compensate for risk. This was the seed from which the mighty tree of modern interest would grow. From these ancient beginnings, the concept of interest traveled through time and space, evolving with each civilization it touched. In the Roman Empire, for instance, interest rates were a matter of law, a way to regulate commerce and protect the rights of both borrowers and lenders. But as history marched on, so did the evolution of interest. With the rise of medieval Europe, the church began to view interest as usury, a sinful practice. But even this moral judgment could not halt the march of economic progress. The Renaissance brought about a change in perspective, and interest was once again seen as a necessary tool for growth and prosperity. Fast forward to today, and interest has become a cornerstone of our global economy. Banks, credit cards, mortgages, they all revolve around this concept. But while interest has facilitated economic growth and opportunity, it has also brought about inequality and hardship. It is a double-edged sword, offering both benefits and pitfalls. In the hands of the powerful and wealthy, interest can be a tool to amass even greater wealth. But for the less fortunate, it can become a cycle of debt, a trap from which escape seems impossible. It's a paradox that continues to spark debates and discussions around the world. And so, what started as a simple idea has now become a complex system that governs our financial lives. As we delve deeper into this topic, we'll examine how interest, this seemingly innocuous concept, has the power to shape societies for better or for worse. But is this system truly beneficial for all, or is it a tool of enslavement? Let's delve deeper into the implications of interest, particularly its impact on the economically disadvantaged. Interest, in theory, is a mechanism that encourages economic activity. It's a reward for lenders to part with their capital, and a cost for borrowers to utilize this capital. However, when scrutinized, does this system really serve all parties equally? For the affluent, interest might be a mere charge or a lucrative return on investments, but for the less fortunate, it can be an insidious trap. Imagine a scenario where a low-income individual secures a loan to meet basic needs, or perhaps to invest in a small business. The interest on this loan, though seemingly small at first, can accumulate over time. As the debt mounts, so does the burden of repayment. This burden can often exceed the borrower's capacity to repay, leading to a vicious cycle of borrowing more to repay existing debts. This is the cycle of debt and poverty, a cycle that is incredibly hard to break. Moreover, this cycle isn't confined to individuals alone. Whole nations, particularly developing ones, can fall prey to this trap. They borrow to stimulate development, but the accruing interest often outpaces their economic growth. The result? A nation trapped in debt, struggling to break free. So, is interest a tool of economic growth? Or is it a cunning trap? It's not hard to see why some view interest as a tool of enslavement. It can create a scenario where the borrower becomes a perpetual servant to the lender, laboring to repay a debt that never seems to diminish. Thus, the very mechanism that is supposed to foster growth can also become a shackle, binding the less fortunate in a cycle of perpetual debt. The question is there a better way? Can we conceive of an economic system that serves all members of society equally? Is a world without interest merely a utopian dream, or could it be a reality within our grasp? What if I told you that a major world religion has been cautioning against the pitfalls of interest for centuries? Welcome to the Islamic perspective on interest, a viewpoint that is both profound and enlightening. Islam, one of the world's major religions, has long held strong views against interest, or in Arabic, riba. This is not a random prohibition, but a deeply ingrained part of the faith's principles on economic justice. Islamic law, also known as Sharia, strictly forbids riba. Now you might be wondering, why? The answer lies in the Islamic principles of fairness, equality, and the prohibition of exploitation. In a nutshell, Islam seeks to establish an economic system that promotes equitable distribution of wealth and discourages practices that could lead to social disparity and injustice. So what exactly is riba? It's commonly understood as usury, or the practice of lending money at exorbitant rates. But in an Islamic context, riba extends to any predetermined payment over and above the actual amount of the principal, or the loan. It's seen as a means for the rich to exploit the poor, leading to an unjust accumulation of wealth. Now let's delve into the concept of usury. In the olden days, usury was a way for the rich to lend to the poor at high interest rates, effectively trapping them in a cycle of debt. This practice was seen as inherently exploitative, and was thus highly discouraged in Islam. Moreover, Islam puts a strong emphasis on the ethics of transactions. It advocates for mutual consent, transparency, and the absence of exploitation in all economic dealings. This is a stark contrast to the interest-based system, where the lender often has an upper hand, potentially leading to an imbalance of power and exploitation. In the Islamic economic model, transactions are based on profit and loss sharing, risk sharing, and ethical standards that promote social justice. This system seeks to prevent the concentration of wealth in a few hands and ensures a fair distribution among all. In Islam, the emphasis is on a system that promotes fairness and discourages exploitation, a stark contrast to the potential pitfalls of the interest-based system. In a world where interest seems unavoidable, where does that leave us? Interest has become so deeply intertwined in our financial systems that it can feel like an inescapable part of modern life. From mortgages and student loans to credit cards and savings accounts, it's everywhere. But is it truly unavoidable? Let's take a closer look. The concept of interest, or usury as it's also known, is not a universal constant. There are financial systems and practices that operate without it. For instance, Islamic finance offers a compelling alternative. Grounded in the principles of risk sharing, fairness, and ethical investing, it offers a stark contrast to interest-based financial systems. Islamic finance operates on the principle of risk sharing, where the lender shares in the profit or loss of a venture. This differs greatly from conventional banking, where the lender earns a profit regardless of the outcome of the borrower's venture. It's a system that inherently discourages reckless lending and promotes financial responsibility. Cooperative banking is another alternative. In this model, members of a community pool their resources and then lend to each other, sharing both the risks and rewards. It's a system built on mutual aid and cooperation, not the exploitation of someone else's need. In a similar vein, the rise of peer-to-peer lending and crowdfunding platforms has created new avenues for people to raise funds without resorting to high-interest loans. These platforms connect individuals who need money with those willing to lend, often at much lower rates than traditional banks. So, while it may seem like interest is an unavoidable evil, these alternatives suggest otherwise. They show that it is possible to exist in modern society without engaging with interest, to navigate the financial world in a way that aligns with ethical principles and values. It's not an easy path, and it requires a willingness to challenge the status quo. But for those willing to take the leap, it can open up a whole new world of possibilities. Despite the prevalence of interest, there are alternatives that can provide a more equitable way forward. So, is interest an essential evil, or can we envision a world without it? That's the question we've been grappling with throughout our journey today. Let's take a moment to recap our discussion. We started with the birth of interest, a concept that first emerged in ancient civilizations. It was born out of the need to encourage lending, to stimulate economic growth. But over time, it transformed into a tool that, many argue, perpetuates inequality and enslaves the poor. We delved into the mechanics of interest, and it's not hard to see why it's often painted in a negative light. The rich get richer, while the poor are trapped in a cycle of debt. It's a system that seems to be inherently unfair, an instrument of financial enslavement that disproportionately affects the most vulnerable among us. We then explored the Islamic perspective on interest. Islam, a religion practiced by over a quarter of the world's population, strictly prohibits interest, or riba as it's known. It views interest as an exploitative practice that fosters unfairness and inequity. Instead, it promotes risk sharing, mutual cooperation, and a sense of community. But is a world without interest possible? We examined potential alternatives like Islamic banking, which operates on principles of risk and profit sharing. It's a model that's gaining traction not just in predominantly Muslim countries, but globally. So where does that leave us? The reality is, interest is deeply ingrained in our current financial system, but that doesn't mean we should accept it without question. If anything, our discussion highlights the importance of scrutinizing these systems, of challenging the status quo, and of seeking alternatives that promote fairness and equity. As we continue to navigate our complex financial landscape, it's important to question the systems we take for granted and explore alternatives that may lead to a more equitable society.